Investing in index funds is a popular strategy for many investors, as they offer diversification and relatively low fees compared to actively managed funds. Over the last 5 years, certain index funds have outperformed the broader market and delivered significant returns to investors. Whether you're a beginner or an experienced investor, these funds can provide excellent growth potential. In this video, we'll explore the top 10 index funds that have outperformed the market in the last 5 years. 1. Vanguard Total Stock Market Index Fund, VTSAX. The Vanguard Total Stock Market Index Fund, VTSAX, has consistently been one of the top performers over the last 5 years. This fund seeks to track the performance of the entire U.S. stock market, including small, mid, and large cap stocks. With its low expense ratio and broad diversification, it has delivered impressive returns, reflecting the overall growth of the U.S. economy. Investors looking for exposure to the entire stock market should consider VTSAX as a solid choice for long-term growth. 2. Fidelity 500 Index Fund, FXAIX. The Fidelity 500 Index Fund, FXAIX, is designed to replicate the performance of the S&P 500, a benchmark for large-cap U.S. stocks. With low management fees and a strong history of outperforming its benchmark, FXAIX has been a favorite among investors seeking exposure to the top 500 U.S. companies. In the last 5 years, this fund has benefited from the strong performance of tech giants and consumer staples companies, making it a reliable investment for those looking for growth at a low cost. 3. Schwab U.S. Large Cap ETF, SCHX. The Schwab U.S. Large Cap ETF, SCHX, focuses on large cap U.S. stocks, tracking the performance of the Dow Jones U.S. Large Cap Total Stock Market Index. This fund has shown strong performance, benefiting from the growth in blue-chip companies across various sectors. With its low expense ratio and solid diversification, SCHX is an excellent option for investors looking to capitalize on the strength of large-cap stocks in the U.S. 4. iShares Core S&P 500 ETF, IVV. The iShares Core S&P 500 ETF, IVV, is another popular index fund that tracks the S&P 500. With its low expense ratio and broad exposure to top U.S. companies, IVV has outperformed many other funds in recent years. As one of the largest and most liquid S&P 500 ETFs, it offers investors a great way to gain exposure to the U.S. stock market's largest and most established companies. 5. Vanguard Growth Index Fund, VIGRX. The Vanguard Growth Index Fund, VIGRX, focuses on large-cap U.S. growth stocks, making it an ideal choice for investors seeking higher growth potential. The fund tracks the performance of the CRSP U.S. Large Cap Growth Index, which includes companies with above-average earnings growth potential. Over the past 5 years, VIGRX has delivered impressive returns due to the strong performance of technology and growth-oriented sectors. 6. SPDR/S&P 500 ETF Trust, SPY. The SPDR S&P 500 ETF Trust, SPY, is one of the oldest and most well-known index funds that tracks the S&P 500. With a large amount of assets under management and high liquidity, SPY has consistently delivered strong returns for investors. Its broad exposure to the largest U.S. companies has made it an essential part of many investors' portfolios, especially those looking for a diversified, low-cost fund. 7. iShares MSCI Emerging Markets ETF, EEM. For investors looking to diversify their portfolio beyond the U.S., the iShares MSCI Emerging Markets ETF, EEM, provides exposure to a wide range of emerging market economies. This fund tracks the performance of the MSCI Emerging Markets Index, which includes stocks from countries such as China, India, and Brazil. Over the last 5 years, EEM has benefited from the strong growth in emerging markets, making it an attractive option for investors seeking higher returns in a more volatile market. 8. Vanguard Total Bond Market Index Fund, VBTLX. The Vanguard Total Bond Market Index Fund, VBTLX, tracks the performance of the Bloomberg Barclays U.S. Aggregate Bond Index, which includes government, corporate, and mortgage-backed securities. While bonds tend to offer lower returns than stocks, VBTLX has still provided steady growth over the last 5 years, making it a solid choice for more conservative investors looking for stability in their portfolio. 9. T. Rowe Price Blue Chip Growth Fund, TRBCX. The T. Rowe Price Blue Chip Growth Fund, TRBCX, is another fund that focuses on large-cap growth stocks, but it has a more actively managed approach compared to traditional index funds. TRBCX aims to provide long-term capital appreciation by investing in blue-chip companies with a track record of strong earnings growth. Over the past 5 years, this fund has outperformed many other large-cap funds, making it a popular choice among growth investors. 10. Invesco QQQ ETF, QQQ. The Invesco QQQ ETF, QQQ, tracks the performance of the Nasdaq 100 index, which includes the 100 largest non-financial companies listed on the Nasdaq stock market. The fund has been a standout performer in recent years, driven by the strong performance of technology giants like Apple, Amazon, and Microsoft. For investors looking for exposure to the tech sector and high-growth companies, QQQ is a strong contender. Index funds offer an excellent opportunity for investors to build a diversified portfolio with minimal effort and cost. The funds listed above have outperformed the broader market in the last 5 years, demonstrating strong growth and consistency. Whether you're interested in large-cap stocks, growth stocks, or emerging markets, there are index funds to match your investment goals. Before investing, always consider your risk tolerance and financial objectives to select the best funds for your portfolio.